What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information, stay for the perspective. A couple of days ago, Cathie Wood announced that her investment firm, Ark Invest, is doubling down on her Bitcoin price prediction of $500,000 by 2026. If that sounds like a lofty goal, don't forget that this is the same Cathie Woods who 5 years ago predicted based on Ark's research that the Tesla stock would hit $4,000 in 2020. If you account for the stock split adjusted price, not only did we do it, but we did it in the predicted time frame. Now, I knew that Cathie was bullish on Bitcoin. What actually caught my attention is that she's now turning bullish on Ethereum as well. I have a position in Ethereum, so clearly this is of great interest to me. She said that Ark Invest crypto exposure would go from currently 100% Bitcoin to 60% Bitcoin and 40% Ethereum. This is because of the acceleration in adoption and dev activity related to NFTs and DeFi or decentralized finance. In a direct quote, she said, "I'm fascinated with what's going on in DeFi, which is collapsing the cost of the infrastructure for financial services in a way that I know the traditional financial industry does not appreciate right now." For a little bit of context on what she's referring to here, a high yield savings account in traditional banking would pay you, if you're lucky, a 0.50% annual yield, while you can earn anywhere between 5 to 12% relatively easy by staking your crypto. I'll cover what staking is and how to go about it in an upcoming video. Cathie's comment get me thinking about a recent podcast by Bankless with Raoul Pal on Ethereum and the opportunity that the crypto space represents as a whole. Raoul Pal is an economist, investment strategist, and publisher of the Global Micro Investor. Before forming his own company, Real Vision, he was the head of European hedge fund sales for Goldman Sachs. So for today's video, I want to play you 3 clips from that podcast. The full podcast is an hour and a half long, and I will link that in the description below, should you want to go and watch it on your own, which I would recommend that you do. It's full of great insight. The first clip here covers how Raoul thinks of the crypto space growth over time, and at the most basic level, why he's investing in it. Take a listen.
But no investor has everything right. And where I see some value in Bankless listeners looking at your mental model is you're not a monetary maximalist. You're not necessarily a technology maximalist. You don't say this layer one versus that layer one. What I would paint you as, Raoul, is you're a Metcalfe's law maximalist. Right? It's all about the network effect. What sort of network effects you look at? But is it address adoption? Is it number of holders? What is it?
It doesn't really matter. If you look at the rate of adoption that's going on of the entire crypto space, and this is my true north. This is all I need to know. There's one single thing I need to know and nothing else. So we know that it's growing at 113% a year in terms of number of users. And we will assume that over time, that trend rate of growth falls a bit. So if it falls from this year and goes down to 83%, so that's a significant fall in the growth rate. And we saw the internet do similar, but it was at peak growth was 63%, we're at 113. It gets by the end of 2024 to 1 billion people. That gets us to about 3 or 4 billion people by 2027, 28. The entire crypto space as of today hit 2 trillion again, I think. Global equities are about 200 trillion. Global bonds are like 200 trillion, 2 trillion, 200 trillion. I figure that's probably 100x. And we all know, almost all of us realize that all bonds, all securities, all assets are going on chain anyway. So it's probably even bigger than that. But the point being, is that you'll never, ever in your entire life, ever again, and ever beforehand, were given 100x in an asset. You've never been given this. And you can basically choose anything and it will go up. So once you do that, you're not scared of making the wrong bet. And it stops you being tribal. You take some basic bets, Bitcoin, Ethereum, a couple of others here and there, and then you can just have a basket of stuff. And over time, decide, okay, I quite like that, or that's getting faster adoption. So that's how I tend to deal with it, is forget trying to model it and look for fair values and this. It's like, as I said, you can be a 3-year-old kid and be given a box of names of cryptocurrencies and take 10 out, and you will literally make 30 times your money over the next 20 years and next 10 years.
As someone who likes to simplify things and takes the macro view, this resonates with me. I'd say that Raoul is being conservative with his 30x over 10 years comment here, considering some of the moves we've seen this past year alone in names like Polygon, Cardano, and Solana, whose adoption and network effect is starting to accelerate as they are increasingly becoming a viable alternative to Ethereum. And that's going to be in the NFT and DeFi space. Now, that said, 30x is a good average number, and that's pretty significant returns, right? The key here, and I've said this before in previous videos, is that this isn't a zero-sum game. The reality is both centralized, so think Visa, Google, for example, and decentralized networks will integrate with one another over time. There will be larger and smaller ecosystems, but ultimately they will all be interoperable and it will be pretty seamless from a user perspective. Directionally, that's where we are going, and that's really all that actually matters. Now, take a listen to his price prediction for both Ethereum and Bitcoin and the why behind it.
How about end of 2021? Take us there. So do you have any price predictions? Let's do Bitcoin and
my price prediction has been ETH north of 20,000.
Wow.
And that's pretty simple. All I did is just map over the ETH chart to the Bitcoin 2017 chart. They work perfectly. And it gives you 20,000. So, there's no great science to that, but it feels about right. I've also mapped the Bitcoin price versus Bitcoin 2013. They look pretty similar. And there's a bunch of other ways I do it with Bitcoin, with log charts and regression analysis, stuff like that. Generally speaking, I think it's somewhere between 250 to 400,000 with an outside chance of 1 million if we get an extended cycle.
We're talking the end of 2021, or are we talking longer term than that?
End of 2021, March 2022, something like that.
Wow.
Don't forget that they usually go up 5 to 10x in the last 3 months of the year. We haven't even got to the all-time high, but let's say Bitcoin goes up, 5x from the 60,000 high. That's 350. That'd be very normal rally for year end, considering we're about to have an ETF. And if I'm right, we might see the central bank pivoting to more printing. They may not print more money this year, but they'll start talking about it. Those two things alone are enough to drive Bitcoin to 350, 5x from here.
You do think we're about to have a Bitcoin ETF then? Gary Gensler's going to
without question. It's probably coming in October.
I don't need to explain the implication of how bullish a Bitcoin ETF approval would be for even greater institutional participation. We're just now entering the early adoption phase of blockchain technology. The thing you need to know and understand is that firms like Ernst Young, which is one of the big 4 accounting firms in the world, are now entering the crypto space. They offer digital strategy and strategy consulting services for the likes of HP, Intel, Walmart, Amazon, Google, Apple, Facebook, just to name a few. They're integrating with Polygon, which is an Ethereum layer 2 scaling solution. The reason for that? Working with Polygon provides EY teams with a powerful set of tools to scale transactions for clients and offer a faster roadmap to integration on the public Ethereum mainnet. The point here is the firm that helps the largest corporations in the world improve their corporate strategies and find new efficiencies, that firm is adopting crypto. What do you think happens to everyone they advise? Let's go on to the third and final clip.
Over the next 10 years, we're already, all of us, dealing with this crypto exponentiality, right? We're starting to get our heads around what exponentiality means. When I say crypto goes up 5x in the last 3 months of the year, you kind of laugh, but you think, yeah, it's possible, right? That's understanding.
I definitely do.
That's what exponential means, right? We're starting to get our heads around this. All at the same time, the largest confluence of technologies that are all into maturity, i.e. the exponential stage. That's AI, robotics, genetic sciences, EVs, green energy, distributed computing power, Internet of Things, wearable technology, autonomous vehicles. There's a whole bunch of these things that are game-changing. Literally, we can't get our heads around what this all means. And it's all going to happen at the same time. Now, there is a decent probability that changes the trend rate of growth finally. And then there is another probability that if you stick any money into any of these things, you can make some real returns, some really gigantic returns. But it's going to leave a lot of people behind because people fear change. And if you're not used to it, you're going to get terrified. I mean, Look at the narratives that are going on right now. Vaccine, anti-vaccine. What is that about? Technology. Elon Musk, self-driving cars, Tesla, the hatred and the love. What is that about? Technology. Cathie Wood. I mean, why people are creating an anti-Cathie Wood ETF? That's beyond me. Why? Technology. What is going on with global warming? Why do people fear that? Technology. Why do people fear Bitcoin? Technology. Why do Bitcoin people fear Ethereum? Technology. It's this unprecedented rise in technology that is making us all feel like, Christ, I can't keep up. And I don't want things to change as fast. And that's driving societal problems on a scale, and that's not going away unless society participates in change and benefits.
Technology is seeping into every aspect of our lives. The world is increasingly going digital, and a big part of what will allow us to build a more secure and efficient digital world, or metaverse, is crypto and blockchain technology. This is why more regulation is on the verge of coming to the space, and why financial institutions are increasingly positioning themselves to be able to better serve their clients as this shift occurs throughout this decade. Between crypto asset price appreciation and the yields you can earn by staking your crypto, keeping all of your money in the traditional financial systems no longer makes sense in my opinion. Now, I'm not a financial advisor, but it's pretty clear to me that taking the long-term view here and allocating appropriately to crypto should yield some pretty significant returns over the next few years. And on that note, I'll leave it here for today's video. If you enjoyed the content and it gave you a new perspective, make sure to hit that like button and share with others you think could benefit from this. Subscribe and don't forget to ring the notification bell so that you don't miss out on any future content just like this one. Thank you for watching, stay humble, hustle hard, and I'll see you back here on Sunday.